We will not allow China to isolate Taiwan.
这一次来台湾，其实没有一个不认同，包含我们台湾地区，我们也会如影随形的。
Michael Burry just exposed the US government for the worst scandal of all time. We're talking about World War III, insider trading, government manipulation, and a multi-year inflationary crisis. People thought Burry went insane when he predicted the 2008 housing bubble, but the housing recession is like a baby compared to the monster that Burry sees right now. He's either the smartest man in the room or the most delusional fund manager. The Federal Reserve is lying. They were supposed to pull back tens of billions of dollars out of the economy starting on June 1st, 2022, but they didn't do so. That might sound like a bold claim to make, but it's backed by unrefutable evidence. The Federal Reserve has to disclose all of its assets by law, which can be found on the New York Fed website. Starting on June 1st, the Fed claims that they were going to sell $47.5 billion worth of securities per month. This selling includes $30 billion worth of treasury bonds and $17.5 billion of mortgage-backed securities. Michael Burry looked through the Fed's website and noticed that they were not selling the amounts that they claimed to be doing. Burry tweeted, "Drugs are hard to kick. Fed was supposed to sell $30 billion of treasuries and $17.5 billion of mortgage-backed securities per month starting June 1st. Quantitative tightening. During June, mortgage-backed securities holdings rose almost $3 billion. Treasury holdings fell less than $10 billion. So instead of selling $30 billion of treasury bonds or treasuries in June, the Fed only sold less than $10 billion of treasuries. And instead of selling $17.5 billion of mortgage-backed securities or MBS in short form, the Fed actually bought $3 billion worth of MBS. The Fed is deceiving everyone right in front of their faces. I'm currently recording this video in August, so let's see if the Fed followed their plan in July 2022. On July 6th, the Fed's holdings totaled at $8.364 trillion. On August 3rd, the Fed's holdings were worth $8.344 trillion. That's a $20 billion decrease, which is not the $47.5 billion decrease that the Fed was promising. I subtracted the two charts to find exactly which securities changed month over month. Treasuries fell by a total of $27 billion instead of the promised decrease of $30 billion. MBS holdings actually increased by over $8 billion instead of the promised decrease of $17.5 billion. This is outright fraud by the Federal Reserve. They're not cutting back at the rate that they promised. In addition to this, the US government is also concealing the fact that the economy is crashing. After the US economy appeared to be entering a recession, the White House changed the definition of a recession. A recession is generally defined as 2 consecutive quarters of negative GDP growth. The US GDP has declined for 2 quarters in a row, so we are currently in a recession. The White House does not want you to think that. The White House released a blog on July 21st describing a recession as a decline in the labor market, consumer and business spending, industrial production, and incomes. Burry knows this is ridiculous because the economy, which is tracked by the gross domestic product, is clearly declining. He tweeted that the White House would like you to redefine a recession as one in which consumers are not borrowing on credit cards to pay for inflation, and neither is the labor force inadequate for the size of the economy. GDP out Thursday. Not that there's anything wrong with that. Burry is essentially saying that the White House is purposely deceiving you with the wrong statistics. The White House is claiming that inflation-adjusted income, or real personal income, is an indicator of economic stability. Burry knows this is inaccurate because credit card debt is skyrocketing to pay for increasing prices. The other statistic that the White House pointed to was the unemployment rate, which is still quite low as of now. Michael Burry believes this is once again deceiving because less people are participating in the labor force. People have been leaving the labor force by retiring or simply not looking for jobs. The unemployment rate only counts those who are actively looking for jobs. This is seen in the labor force participation rate, which is significantly lower than pre-pandemic levels. The unemployment rate is calculated by taking the number of unemployed people and dividing it by the labor force. Because previously unemployed people are leaving the labor force, the unemployment rate is being artificially lowered. This is because subtracting a constant number on the numerator and denominator leads to a lower outcome. If we take the fraction 3/5 and subtract 2 in the numerator and denominator, the percentage goes from 60% to 33%. This phenomenon is artificially lowering the unemployment rate, thus causing the economy to appear to be strong when it actually isn't. The The White House is either too stupid to know this or is purposely issuing propaganda. The government's actions have propped up the sentiment in the short term. Ever since the Fed announced that they would be raising interest rates and starting quantitative tightening, the market sentiment tanked. But recently, people have started to become bullish once again. Burry believes that such silly behavior indicates that the crisis is far from over. The fact that people have become bullish indicates that we're simply in a dead cat bounce. Burry tweeted that the silliness is back. After 1929, after 1968, after 2000, after 2008, the strain of silliness that transformed the bulls and the bubbles completely and utterly disappeared. But that familiar COVID-era silliness is not dead yet. Like 2001 before Enron, before WorldCom. While the economy is still on a decline, speculative investors are engaging in what Burry calls silliness. Magic Empire Global, a Hong Kong financial service company, recently went public on a stock exchange and soared by over 24 times in value. This is representative of the same speculative behavior that occurred in 1999 as well as 2021. Burry tweeted that gamblers gamble more the more they lose. #silliness. Burry is referring to the Monte Carlo fallacy, which is also known as the gambler's fallacy. The Monte Carlo fallacy is the belief that previous losses indicate a higher chance for future gains. For instance, let's say someone bet on a coin toss being tails. In this example, the first 3 coin tosses came out as heads. This situation would typically cause the gambler to think that there's a higher chance of the next coin toss being tails. Unbeknownst to the gambler, past events are independent of future ones, and the coin toss still has a 50% chance of being heads. The Monte Carlo fallacy is an incorrect but common belief that past failures will indicate a higher chance of future success. Because gamblers lost huge sums of money in 2021, many are likely to fall for the Monte Carlo fallacy. We're seeing this come into play with stocks like Magic Empire Global. Recent data backs this up as well. I searched up short squeeze on Google Trends and found a slow but steady increase in search volume over the last 90 days. This type of behavior is similar to the dot-com bubble's dead cat bounce in the early 2000s. Burry questioned, "Nasdaq a bull market because it is up 20% off its low? Who makes this stuff up?" After 2000, the Nasdaq did that 7 times as it fell 78% to its 2002 low. Burry also mapped out the S&P's performance in 2001 and 2022 and found a similar rebound in price. The S&P fell by 12% in 2001 before rebounding by 9%. Similar to 2001, the S&P is following a similar price pattern in 2022. Such a rebound is unreasonable because the underlying economy is shrinking and will continue to do so. If you watched my previous videos, you would know that inventories are building up because of the bullwhip effect. The bullwhip effect is a phenomenon where every step of the supply chain orders extra supply, causing the total supply to be much more than anticipated. Because companies will have to lower prices from the bullwhip effect, they will soon experience significantly lower earnings. And this is going to be part 2 of the 2022 market crash, earnings compression. Part 1 was when valuations came back down to reality through multiple compression. This includes multiples like the price to earnings ratio, the price to sales ratio, and the EV to EBITDA ratio. Burry explained how adjusted for inflation, 2022 first half S&P 500 down 25 to 26%, and Nasdaq down 34 to 35%, Bitcoin down 64 to 65%. That was multiple compression. Next up, earnings compression, so maybe halfway there. Burry's tweets can be confusing at times, and it's not a surprise that this can be used to deceive others.
Everyone's worked up about Michael Burry.
Michael Burry, of The Big Short fame.
The mainstream media frequently tries to complicate Burry's thesis to fit their narrative. Michael Burry called out Business Insider for misinterpreting his thesis into 3 parts. One paragraph in the article made it seem like Burry was bullish when he actually wasn't. The paragraph stated that many investors have been dumping stocks, cryptocurrencies, and other assets in anticipation of further rate hikes and a tighter money supply. However, Burry seems to expect the inflation threat to recede, and the Fed to loosen its stance and begin cutting rates and ramping up bond purchases again. This paragraph implied that Burry is bullish because he expects inflation to cool down. This completely missed the mark. Burry's deflationary thesis is actually bearish. Not only does the Fed cutting rates create long-term inflation, but prices dropping also means that corporate profits will suffer. Business Insider then completely reversed their stance 2 paragraphs later by talking about how Burry's thesis is bearish. This is a complete disaster of an article and totally misinterprets Burry's prediction. Burry reacted to the article by saying, "You heard it here first, or second, or third." The financial mainstream media is awful. They frequently confuse readers and never expose any blatant manipulation. I'm currently on a mission to create videos like this to clarify what's actually going on. At 1 million subscribers, I'm going to release a video so shocking that people might get arrested. 93% of you aren't subscribed, so what are you waiting for? Thank you for subscribing, and let's get back into the video. In order to refute the mainstream media, Michael Burry simplified his thesis into 2 simple parts. He explained how when you see inventory builds, think 2 things: just in case supply chain management and inflation. There is nuance in everything, and please don't think anything, including stories on my meaning, is as simple as you want it to be. Burry is saying that when you see increases in inventories, this means that prices are going to drop. The mainstream media will try to overcomplicate the short term while simplifying the long term. Inflation won't just go straight up or straight down. It's going to go up and down in a cyclical fashion, with the long-term trend being upwards. One short-term indicator that the mainstream media focuses on is earnings reports. Earnings reports reflect a company's performance over the past quarter. Recent earnings reports have shown that companies have been doing well so far. However, most companies have been predicting that their future quarters will be a total disaster. Burry explained, "These earnings reports and by Jove the whole season have a last hurrah feel." By Jove is referring to the Roman deity Jupiter, which essentially means "oh my god." This basically means that the companies have been shocked by what's coming. The last hurrah is the final victory before complete failure. Burry is saying that the recent earnings reports might seem great, but the next ones are going to be awful. The epitome of this is Walmart. Walmart recently lowered their profit outlook for the next quarter and the entire fiscal year of 2023. In response to Walmart's earnings, Burry laughed. He later explained how someone was going on about Christmas in July. Hope you enjoyed it. One of my previous videos covered Burry's Christmas in July prediction, where he was predicting that Walmart and other retail stores would experience substantially lower profits in July and onwards. Lower prices in the short term might sound great for inflation, but there's one variable that's missing, which is the Federal Reserve. Because prices are beginning to drop, the Fed will likely revert back to printing money. The reason why I say this is because human behavior is predictable, and a similar situation happened in the 1970s as well. Because of the bullwhip effect, the stock market crashed in the early 1970s and prices dropped as well. As a result of this, the Fed ended up cutting interest rates to boost the market. This helped stocks rally in the short term, but also led to long-term inflation. Burry tweeted, "The New York Times front page a day after the Dow bottom on December 6, 1974 doesn't mention stocks, which were down 45% since the January 1973 peak. Mentioned was the Fed cutting rates to 7.75%, signaling a credit ease. Stocks rallied 53% in 6 months, making a lasting top on that killer mistake." So in reaction to prices dropping, the Federal Reserve will start printing money again, also known as quantitative easing. Unbeknownst to the Fed, their quantitative easing will be too early and cause long-term inflation to settle in. Burry believes that the upcoming inflationary disaster will be worse than any other inflationary period in US history. 2020 is the mother of all bubbles. Burry warned how the last 2 inflationary periods in the United States, the 1940s/50s and the 1970s, each had 3 distinct inflationary peaks. 20s, post-flu, World War I nihilism. 40s, post-war spend, baby boom. 70s, bad energy and Fed policy. 2020s, all of the above. The 2020s has almost every inflationary characteristics that our previous crises had. We are currently in a post-COVID environment. The Fed printed trillions of dollars and will likely continue to do so. Energy prices are continuing to skyrocket. The US government is clearly setting up the economy for a terrifying situation, but that's just scratching the surface. Government leaders have been actively insider trading behind the scenes. Politicians have been using government resources to support companies that they own shares of. The epitome of this is Nancy Pelosi, the Speaker of the House. Pelosi has a track record of purchasing stocks before the government boosts them in some shape or form. A recent example of this is Pelosi purchasing semiconductor stocks before the CHIPS bill was passed. Burry tweeted, "So Speaker Pelosi made a bundle on semiconductor stocks bought recently, because she knew this was coming. Should be illegal." Another prime example of this is Joe Biden selling oil to a firm that Hunter Biden was invested in. Burry tweeted, "So Biden sold 950,000 strategic petroleum reserve oil barrels to Sinopec, a Chinese oil firm. His son Hunter's private equity firm has a $1.7 billion investment in Sinopec Marketing, a wholly owned subsidiary of Sinopec. And I have to read the Washington Free Beacon to get the story. Burry believes that there should be more eyes on the government's insider trading, and rightfully so. The White House and the Fed's actions are not aligned with the long-term success of the United States. But this is nothing compared to the final nail in the coffin, a world war.
It was unprovoked, but this is what Russian President Vladimir Putin unleashed on Ukraine.
Tensions between the West and the East are rising as the Ukraine war continues and China threatens control over Taiwan. In preparation for a world war, CEOs in the US are moving manufacturing to the US. This activity is being hidden by all sorts of buzzwords, including onshoring, reshoring, and nearshoring. According to a review of earnings call and conference presentations by Bloomberg, references to these buzzwords are up by over 1,000% compared to pre-pandemic periods. Not only that, but manufacturing construction is at an all-time high right now, with $94 billion being spent annually on manufacturing construction. A UBS survey of C-suite executives showed that over 90% of executives either had plans or were in the process of moving production out of China. 80% of these executives cited the US as the main location, with Mexico being the second most popular choice. Burry believes that the underlying reason for this is an incoming world war. The implications of onshoring will be serious. Because moving production back to the US takes time, a world war would exacerbate the current supply chain shortage. Burry tweeted, "Seems China moves on Taiwan in 2023 as the war in Ukraine spreads into the EU, maybe via Lithuania. Onshoring/blue collar shortages plus global supply chain restructuring raise long-term inflation's floor, even as a bullwhip cycles lower to that end." Tensions between the US and China are increasing so much that a world war is likely going to happen. China recently withdrew its promise to not send troops to Taiwan. This essentially threatens a Chinese invasion into Taiwan. The US continues to maintain that it will keep its operations in Taiwan, and this will inevitably lead to an invasion. China recently revealed a white paper that shockingly states that the country will reunify Taiwan with China. The first part of the white paper states that Taiwan is part of China. This is an indisputable fact. The white paper then detailed some history of Taiwan that was supposed to back why Taiwan is part of China. Perhaps the most frightening part of the white paper was section 3. China's complete reunification is a process that cannot be halted. This is a clear sign that China will take control over Taiwan at all costs and inevitably cause World War III. So there you have it, Burry's most shocking prediction ever. He believes that the Fed is lying, the White House is deceiving everyone, politicians are openly insider trading, and most terrifying, World War III is on the brink of occurring. This video is part of a series of videos covering everything about Burry's prediction and how he's betting big on it. So hit that subscribe button to stay updated on how Burry is paving the way for the Big Short too. The mainstream media will never tell you what I'm detailing in this series. If you enjoyed this video, please hit the like button as well. Thank you for all of your support, and I'll see you in the next one.